What's going on, guys? Today I'm going to be showing you the only smart money reversal model that you need. This model is called the extraction model. I have built this model over 4 years of trading ICT, over just refining the model year by year by year until I finally built a complete model for myself. This model gives an average of a 3-to-1 risk to reward and more, but an average 3-to-1, and I pull 6% a week, 6% weekly gains while trading this model. I'm saying I'm going to be showing you this today. So if you guys are having trouble with finding a consistent model or staying consistent in the markets because you just trade different strategies every time, and I'm saying you're just looking for something consistent that you could just focus on, this is going to be the video for you. So without further ado, let's get into the video, and I'm going to show you this insane model. Okay, so with this model, I'm going to be showing you a trade breakdown that I took today. I'm going to be explaining everything, how I took the trade, what I seen to take the trade, everything like that. And this is going to be a complete representation of how you can trade the model on your own basis. So the first thing with this model, what you will want to be doing is looking for a daily range. So a daily range from high to low. This is our today's range from high to low right here. So what I'm using these ranges for is for premium and discount. And what I'm using premium and discount for is when we are above 50% above here, this is when you're going to get the best shorting opportunities. And when we are below 50%, below here, anywhere below this 50% line, this is where the best buy opportunities are going to occur. So as you can see right now in price, we are all the way down here, which means we are in a discount relative to this daily range. So that means buyers are going to have the highest probability of winning when we are down under this 50% level, paired with something else I'm going to show you. But just keep this in mind. This is the first thing that I look at using this extraction model. This reversal model is premium and discount. Right now we're in a discount, so we're going to be looking for longs. Okay, now let's go down to a 1 hour chart. Okay, so this was this morning at 9 o'clock. So as you can see, I told you guys we are in a discount, and when we want to see when we are in a discount and we want to look for longs is you want to see price taking out sell side liquidity on the higher time frames, 1 hour chart and above. This is with my model. So as you can see right here, we have this run lower taking out this low, taking out these lows over here, and we also have an imbalance right here, inefficiency. Sorry, buy side inefficiency. All right, boom. So once we came down at 9 o'clock, 9:30, and we sweeped out this low and these lows over here to the left and traded down into a discount of this buy side inefficiency, what I'm looking for is a reversal. And I'm looking for a reversal in this area because if I want the market to keep going short, then I want the market to be going short off of buy side liquidity, and I want to be in a premium. And sometimes I do take trades that's not in a premium, but we are coming from buy side liquidity and a higher time frame PDA rate. So for an example, this run up here and this run up here took out buy side liquidity, which started this run lower. But notice how we ran buy side liquidity first. So if we're in a discount and we run sell side liquidity, that's not the best opportunity to go short, because I want to be shorting off a buy side, not sell side. So if we're taking sell side inside of a discount, then the only smart thing to do is to go long. So once I'm seeing this at 9:30, taking out these lows, trading down inside this inefficiency, I'm going down to a 1 minute time frame when I see that happen. Okay, so this is the 1 minute time frame. I'm showing you guys my execution that I took, showing you guys that I did take this trade, but I'm going to go over it for you right now. I just wanted to show you guys that I actually took the trade, and I'm not just giving you a random thing in price that I just picked. I actually took this trade this morning. So as when you see price running down into this 1 hour fair value gap that you remember that we just marked up, you start seeing price start to reverse. So we started coming higher. Boom, we have a shift in market structure right here. We have another run higher, taking out this high right here. And then what do you see we left inside of this run higher? We have a fair value gap. Right? Now that you know that this is the 1 hour fair value gap, I'm going to delete it so you guys can see just a little bit more. Okay. So we also have a fair value gap right here. So once I see price start to reverse after taking sell side and running inside the inefficiency and started creating PD arrays like this fair value gap, I'm going to be looking for that. But right here, this is a super important part about this. Mixed with premium and discount, I want to see a 1 hour low get ran if I'm going long. And then I want to see a reversal on a 1 minute chart. But I want to see that reversal happening, and I want to see my entry happening inside of the macro time that ICT states, right? So the macro time is 9:50 through 10:10. But I like to use 5 minutes before the macro time, so 9:45 through 10:15. That's going to be the macro time that we're going to use. Okay. So we have a run higher, and we have a fair value gap. And you see that we trade inside of this fair value gap exactly at 9:45. And then we trade down into it again, and we started running higher. Notice how we trade inside the fair value gap and started running higher inside that macro time. If you don't know what a macro is a time, a time and price. I think it's a 20-minute window or a 30-minute window, something like that. It's like a 20 or 30-minute window in price where the market is engineered to run to a certain point of liquidity. So it has a job to do. So at 9:45, we ran into this fair value gap, and then we ran higher, targeting this short-term high. Why this short-term high? Because it's the closest short-term high in proximity. I want to be targeting that right there. This is the easiest high that you could target. Buy side. So when price ran into this fair value gap, say if you didn't get this trade, we traded higher again, above a down candle. So when we are making down candles in a up range, those are called order blocks. I want to use this right here. Let's go on the 2 minute chart because it was cleaner on the 2 minute. Delete this real fast. I'm going to delete the macro time lines just so the chart won't be messy. But just know that this was an A+ setup because it ran at the time that it was supposed to run. All right. So we have price coming down, taking out sell side. We have price running inside a 1 hour fair value gap. We're in a discount. We have a reversal, and we're waiting into 9:45. We cannot take an entry before 9:45. Only 9:45 through 10:15. So at 9:45, you see we trade down into the fair value gap. Stop loss go under the fair value gap candles low. You see we respected it, traded higher. Once this candle got above this down move right here, we traded back down into it one more time. That's going to be your order block. And then as you can see, price traded off of that order block very strongly. And then we came and hit our first buy side target. I'm going to show you the executions one more time. So my first execution was here when we traded inside the fair value gap. And then my second execution was when we traded above this order block and then we traded back into it. I enter another contract and then I took both off once this candle traded above this high. So that is an easy reversal model, and I'm going to be showing you guys a lot of these examples. If you do want to learn more, like the video, subscribe to the channel and everything like that. Let me know in the comments, because I'm going to be giving way more examples and live trading videos I'm gonna be posting like that. But just to give you guys like a refresher, I'll go over it one more time with you guys. So with this reversal model, you want to be looking for longs inside of a discount, which is anything below this 50% level on the daily chart. And then once you get that, you want to be looking for run on sell side liquidity on the hour chart in the AM session. And then if you get both of those confirmations, you want to be looking for a reversal time on the 1 minute chart at your macro time, 9:45 through 10:15. If price start reversing and start trading inside of fair value gaps and creating order blocks inside of that macro time, then you target the first short-term high, and then you take profits there. And if you want to leave runners, you can leave runners. But the main thing about this model, or the main thing that got me into this trade, was that this trade started running and trading inside of PD arrays inside the macro time. Without time, this model was nothing. With time, it's everything. So that's going to be your smart money reversal model today, the extraction model. If you want to, like I said, if you want to learn more about this model, comment, like, subscribe. I also have a free Discord if you guys want to join. I'm saying that's going to be it for the video. If you guys enjoyed the video, leave a like, and I'm going to see y'all in the next one.